The Bank of Canada again this week because it is expected once again to raise the interest rate.
Bank of England is all set to raise the interest rates next week for the fifth time since December. At
any moment now, the Federal Reserve is expected to raise interest rates for the sixth time this year.
The Fed's goal to tamp down inflation.
Well, inflation is not showing any signs of letting up. So earlier today, the Reserve Bank of India central bank, intervened. They hiked key lending rates once again. By how much? 50 basis points.
1 in 4 homeowners say they will have to sell their home if interest rates go up further, as the Bank of Canada remains on a path of rate hikes in an attempt to tame inflation, now at a 31-year high.
Well, central banks around the world are risking recession and raising interest rates. They're following the lead of the U.S. Federal Reserve, which
A quarter of homeowners in the country say that they might have to consider selling their homes if interest rates continue to rise, making their mortgages more unaffordable.
Namashkar friends, you might be living in UK, US, Australia, Canada or India. This video is equally important for all of us. Let's know why central bank raises interest rate to reduce inflation. When central bank increases interest rates, it's a big news because it affects whole of the economy and causes stock prices to fall. So why do central bank increases interest rates? Let's understand with the basic. What is interest rate? Now if you borrow money, you will have to pay a little more to make it worthwhile for the lender. And this little extra amount you are paying is called the interest. So if you borrow money, you want interest rates to be as low as possible so you don't have to pay that much back. But on the flip side, if you save money, a high interest rate means you will earn more on the savings as a reward of leaving money in your bank accounts. As you all know, there is no single interest rate in the market. There are thousands of banks setting their different interest rates. But all these interest rates are affected by the rate set by central bank. Now as we all know, central bank is the bank of banks and commercial banks are the banks operating under central bank. Now commercial banks have a little thing called reserves, something like cash in hand, which they lend to each other at an interest rate, and they also deposit excess reserve to the central bank to earn interest on them. Now the question comes, why do central bank raises interest rates? When central bank raises the interest rate, they are trying to control the inflation, how fast prices changes for everyone. Now central banks globally like Fed, Bank of England, Reserve Bank of India are trying to control the inflation, and interest rates are really powerful tool they are having to do that. Now when inflation seems to be too high, banks would increase the interest rates. These changes spread through the financial system and slow down the rate of inflation. Let's make it more simple. Here's how. When central bank raises interest rate, that means commercial bank will earn more on their reserves. Now commercial banks might earn more by keeping money with central bank than lending it out to the normal people because the central banks have raised their interest rates. Now to make it worthwhile for commercial bank to lend to the normal people, they will also have to raise their interest rates. And the burden of this raised interest rate is passed on to the public. Now many are thinking, how is the raise of interest rate affect the consumer? Now let's take an example. Mortgages. People normally have mortgages with variable interest rate, which is also called floating interest rate. Now when interest rates are increased, people will have to spend more on their EMIs. And this higher interest rate will translate into less cash for spending on the other things. Less spare cash means households will spend less, and less spending will make businesses to raise their products and services prices. And this should lower inflation, as lower spending will translate into lower inflation. And it's not just that consumers will have to tighten their purses. When interest rate raises, businesses will find it more expensive to borrow and invest. That generally means less economic activity, fewer jobs are created, and in turn fewer jobs will lead to less money for the household and consumer confidence might suffer, which also means less spending. It might sound straightforward to raise interest rate to reduce the inflation, right? But the trick is judging how far to go. In 1981, Fed, Central Bank of America, let interest rate to raise to a whopping 19%. The move curbed inflation but led to a widespread economic pain. A little inflation is okay, it keeps economy moving in a sensible speed. But inflation staying high for too long is a problem. High prices means employee need higher wages, pushing up cost for the business that drives the prices further, potentially leading to an upward spiral of prices and wages. Raising interest rate can slow down an economy right down, but it may take as long as 2 years to see the results from interest rate changes, and central banks knows this. So when they set interest rate, they are trying to read the road ahead. And predicting future is not easy. There can be any global event that can cause inflation to raise. So raising interest rate might be a blunt instrument, but it is still central bank's main tool for taming inflation. Yet central bank would say, yes, raising interest rate is painful and slowing down economy is not a fun, but it is worth it. It is worthwhile to get low and steady inflation, so in long run you don't have to worry about it. So that's it for the interest rate. Now we know why central banks increases interest rate to reduce inflation. This video is summary of 40 to 50 news articles and videos, and I tried to summarize it in a very short video. So if you find this video helpful, a like will be much appreciated. And if you want financial simple words, subscribe to the channel. And if you have any doubts about interest rates, please leave a comment below, I will answer it. So that's it for today. See you in the next video. Till then, peace. Jai Shri Krishna.
The Federal Reserve rapidly raising interest rates. What can you do to prevent a recession?
Continue to grow the economy.